Hey everyone, welcome back to the channel. Today we have a special guest I'm very excited to be able to talk to. His name's Abe. He works in the finance industry. He's done a lot of research on RocketLab and other companies in the space industry, and he sent me some of his research. He seems very knowledgeable about it, and I'm just really excited to be able to share it with you. So welcome to the channel, Abe.
Yeah, so thank you, Dave. I think your videos are amazing and you cover the space industry very thoroughly. So I'm very happy to be here.
Great. I really appreciate that. Um, okay, so before we dive into Rocket Lab, I was hoping you could just tell us a little bit about your knowledge in terms of investing and the space industry.
hmm So as far as my knowledge in investing, I have a business background. I study business and I've done pretty much a ton of different like financial modeling courses,
Mm-hmm.
Wall Street Prep, Corporate Finance Institute, um, just everything related to I just took my TV out. This is funny, but like I don't have a TV. I have a whiteboard where I do DCFs
Oh,
on.
wow.
So
That's pretty impressive.
yes, actually, every room in the house, I took all the TVs out and I just look at trading comparables and discounted cash flows.
Oh, good for you.
Yeah.
Okay. And then I think I just wanted to let our listeners know or viewers know, are you a shareholder in Rocket Lab?
Yes, I have a strong conviction in this company and I hope it does well. And I think it will do not just profit wise, but like it can provide satellite services for communications. So a lot of people will benefit from this.
Right. Yeah, I agree for
I
sure.
hope so.
So it's fair to say then that it's probably one of your larger positions.
Yes.
Great. Okay. And how long have you been researching Rocket Lab for? How did you first get interested in the company?
I went to, well, okay, so how have it been? Well, I look at the market all day, every day.
Right.
And I was looking at what's the future? Like, because really it's kind of like an oracle thing that you have to do. Okay, what's going into the future? And I realized that, first of all, we can't allow monopoly. So SpaceX can't be the only company that's doing space services.
Right.
And I've investigated different returns, like different variables on returns on different companies. And this one just, it jumped off the page. Like I could clearly see a path to profit and
Mm-hmm.
to shareholder value financially.
Okay. And did you start looking into it before they went public or after they went public?
I looked into it after they went public and not only looked into that, but the space industry as a whole. I went as far as investigating, like with everyday astronaut,
Right.
going to the Kennedy Space Center, looking at launches,
Yeah. Actually, by the
asteroid
way,
launches.
sorry to
hmm
interrupt. It may sound kind of
hmm
funny, but one of the things that I really liked about Rocket Lab was seeing how much everyday astronaut liked them, because I know he's like really into the industry, and I feel like he actually visited their launch center, and if he thought they weren't doing things properly, he would have said it. But yeah, he was actually saying like he really loves them and stuff. So
That gentleman is the definition of due diligence. I
yeah,
think.
for sure. Okay, so I think with that, we'll go ahead and dive into your DCF then. And
Okay. Okay, so this is the DCF I made on Rocket Lab, and I'm going to walk you through like what I think of the company.
great.
Um, so let's do this for like a novice person that doesn't know what a DCF is. A
Yeah.
DCF is when you project how a company is going to do, and then you discount the future cash flow to the present and say, well, it's trading at X and it's worth Y, right?
Mm-hmm.
So in this case, it's trading at $5.5, and I believe, giving future revenues, it's worth 14.83,
Okay.
right? At current value. So it's actually undervalued in the present form. Now that would have to be only if the company can grow at certain rates. So here we have a growth period of 10 years.
Mm-hmm.
And essentially that's how many years your DCF is. Discount rate is the cost of both debt and equity. And I've been consulting, and the median for space industry is around 8.8.
Okay.
So I used a 9% discount rate. The terminal growth rate is based on US GDP. It's what happens after the DCF is done, and it's
Hmm.
normally 2 to 3%. So that's what I use for terminal growth rate. And we can look at the forecast, and I was forecasting around 45% increase in revenues up until year 10, and then I think it will increase even more because there will be a huge demand
Right.
for satellites from the US government, but it will be a winner take all industry. So it's either we are it's either Rocket Lab and SpaceX survive and thrive
Hmm.
or go bust, right?
Yeah. Yeah. So how did
So
you arrive at the 45% number?
yeah, so essentially, um, recently they have been growing at a steady rate. So
Hmm.
the government contracts have been coming in. They have a backlog, right? And if
Yeah.
I'm not mistaken, I can Google it, but it was around 150 something, 180 million.
Yeah,
And so
it had been growing pretty substantially over the last few quarters.
So yeah, based on backlog growth, and then based on just I've seen the U.S. government contracting companies that have even like very little orbital capacity, but make very cheap satellites, and they're getting huge backlogs.
Hmm.
And it's a very simple thing. It just requires an insane amount of time uh,
Yeah.
to look through. But if you're able to look through the space industry, you're going to see a very big pattern of huge demand for satellites in space.
Yeah, I think so
And
too.
mhm.
It's just a little difficult because I think today we actually have more capacity as a Rocket Lab than customers are currently ready, but it seems like they're coming and they're all, signing up. It's just like right today they're not ready to launch, so that's a little frustrating, but yeah.
That is correct. And I just want to point out that, contrary to popular belief, this business is a satellite business.
Yeah.
But the winners will be those that have the launch capabilities because it's a huge competitive advantage. You can package it like a McDonald's,
Right.
burgers and fries.
Yeah, I definitely
So
I've never heard it put like that, but yeah, I definitely agree with
yeah,
that.
and Peter Beck said you can put your name in the rocket. So he's all for, like, if you have enough money for a rocket, if your company needs GPS capabilities, communication capabilities, like he's all for helping you launch your rocket as an entrepreneur.
Right. Yeah.
So, um, so we see, yes, like I said, there's a huge back order for backlogs. And that's what really brought me to the steady 45%. And we actually have consensus with Capital IQ. This is like the professional software we use in finance.
Okay.
Investment banks use Capital IQ. So we have consensus in Capital IQ up until, I think it's 2027, of 45% growth.
Okay.
So I
So,
used consensus up until 2027,
right.
and then I used what I thought was relevant, which I thought it was going to keep growing at that 45 and then increase towards the end, just because I really think that there's going to be a greater demand for winner take all rocket and satellite capabilities.
Right. Okay. Yeah, it makes sense to me. So
Hmm.
definitely did some work in coming up with these numbers and not, just guessing, putting them in there.
Yeah, and then what I have to explain is, so basically we have a sensitivity analysis right here, and I hope you can see this.
Yep.
So based on revenue growth, fundamentally the company doesn't have huge intrinsic value, but this is the beauty of it. If they can raise their margins,
Right.
it's insane. It's insane. Like, so if they can just make 20%, right,
Yeah.
on the package satellites plus launch, which they're going to be able to do after 2025, which we expect the volume. If they can raise their net margins to 20%, the actual DCF would show a $37 fair value per share.
Wow.
So yeah, you're buying at 5 and it could be worth 37 in, as soon as they hit profits. So it could be 2025, 2026. So
Yeah.
that's a nice 5x or 6x.
Yeah, and in terms of getting to that margin, you think it's mostly just a matter of increasing their launch cadence and the amount of satellites they're building, um, as well as I assume reusability would help with that.
Correct. There is a break-even cost. So there's a minimum order quantity, right? Like MOQ, that you certainly need to break even. But once you've broken even, you are in for a huge, huge payday. and I'm talking like this could be like, yeah, just I'm sure you know how many millionaires were made out of Apple. I'm
Yeah, for
sure this
sure.
company will create many millionaires. Well, I'm not sure, but it would seem it would
Right.
seem that this company would create many millionaires just based on improving net margins a little bit, which is totally feasible if they have that reusable neutron rocket ready to launch in 2024. I mean, if one, I'm gonna throw a party the day they launch this. Like,
Yeah. Personally, I always find rockets, they tend to get a little delayed. So if it launches in 2025, I'm not going to be too upset. But
yeah.
I do think they'll get
Mhm.
there because they have the expertise.
Yeah, and then I would like to look at the cash position, how much they're going to burn.
Sure. I'd actually
If
be
it's
interested.
okay, like I can use Cap IQ, but I prefer to use simply Wall Street for this. Just very quickly,
Sure. Yeah.
because it's just easier to for everybody to see. And it's essentially I've calculated, and you can see it's basic arithmetic. Like you don't need geometry, nothing. So here it is. We have mhm, cash. Right now we have 542 million in cash,
Right.
and they're going to burn, it seems, 126 plus 80 plus 20. So these are all just estimates. So let's add 50% to them, like worst case scenario, right?
Right.
So
Sure.
they're going to burn. This would be around 200. So they're going to burn, let's say, 300 million. They still have 242 million just cash on hand. This is without diluting
Yeah.
shareholders. So like in the very, very worst case scenario that it takes much more budget and much more time, I still think that they will not dilute share. Well, what you want financially is
Right.
no dilution.
Yeah. Some of these other companies I've looked at, seems like they're definitely going to have to dilute a lot significantly in the space industry
Yes,
anyway. But yeah,
it's because. Sorry, go ahead.
no, I was just going to say, so yeah, their cash position, their balance sheet is definitely one of the things that makes me more comfortable with them.
Yeah, and the strategy of Peter Beck was different than the other SPACs. So this SPAC was done to create vertical integration. I think you covered this with Solario
Yeah.
and other companies. I don't remember the exact names, but their SPAC strategy was to buy the smaller companies and create almost like, I hate to say, but like a huge competitive advantage over the smaller launch providers. I mean,
Yeah, I think
yeah,
so. I mean, it kind
essentially, yeah.
of also comes back to like your McDonald's thing, right? Where they can do everything now. So, yeah.
Yeah, burgers and fries. So this is, I would say also like I like, because I'm a finance person, I like to keep things just math. Like I don't want to say this is like a charity or we're doing this to make the world better. I'm a strictly numbers person,
Right.
but it will make the world better. So
Yeah, I have mentioned in previous videos, like I do think about that when I'm investing. Like I'm not very big
mhm.
on investing in like cigarette companies and stuff like that, but
No,
personally,
and also they're not durable. They're
yeah,
not going to last very
yeah.
long.
So
And I think they've been saying on Seeking Alpha that fossil fuels is the new tobacco, like oil is the new tobacco. But I'm not sure if you've seen that Aramco's profits, the Saudi Aramco, is actually bigger than all the big tech companies put together last quarter. Yeah,
really,
bigger than Microsoft, Google, Apple, I think Amazon put together. Yeah.
wow, I found that surprising because I think Apple is by market cap the number one right now, isn't it?
Yeah, I'm just saying profits,
Right,
net
right.
profits.
It's just
Yeah,
interesting how
it's
they.
impressive. Hmm.
So I guess the multiple must be just a lot lower for.
It's just insane. And then if you look at Oxy, right? Buffett's buying Oxy, Occidental, and it's been a wild ride from $12 a share to 70 something.
Wow.
So it just shows that the world is not fossil fuel free, but it is a dying industry. But it just shows you that, look, and if you can make 7x in 6 months, I mean, that's a better investment than RocketLab financially. So,
Yeah. Well,
I mean, somebody's looking at the market, right? Somebody's doing it.
yeah.
um, yeah. But long term, this should be a better investment than Oxy.
Right.
Long term.
So in terms of if we're looking like, I think we saw today, you think fair value is around, what was it, 12 or 14?
So this is without improving net margins,
Right.
and I think that they will because it's going to be a reusable rocket, and I think that the money is in satellite services, not in the satellites
Yeah,
themselves.
I think you're right about that
So,
as well.
so I'm pretty sure that they're going to hit that nice 20%, $37 intrinsic value mark.
Yeah.
But if they don't, like that's a big if. If they don't, yes, it's currently worth $14.83 a share. But this is obviously, like I said, it's a projection.
Right.
It's based on mathematics. It's based on information. It's based on the space industry. I took the hours and time, but I suggest this is a free DCF. So if you could link it to your video,
Sure.
they can build worst base best
Yeah.
cases. And in the worst case, like if worst ever case, I put like zero or declining growth and no improvements on margins, which is unheard of for a rocket company. And then I set
Right.
the discount rate super high. So like in the worst case, you're not gonna go broke,
Yeah,
right? It's just like
that's still around today's. I think today we are sitting around $5. So, yeah,
yeah, like yeah, which is essentially what you want in finance, not
yeah.
to go
So
broke.
in terms of like a 5-year price, like say in 2027, what would you think would be reasonable?
Well, if they hit the net income margins, it could be 25, 30, easy, right? Like it's all
Hmm.
about those net income margins because you can sell as much as you like, whatever product you're selling. But if you don't look at Tesla when it started making money, right? Before that, it was just trading at multiples.
Yeah.
When Tesla started making money, it went from like 60 to 1,500. Okay, it was overvalued, but you get the picture, right?
Yeah,
It's like
for sure. It
it's
went
an
crazy. Yeah.
yeah, and like 37 would be fair value. So it could trade I'm just saying pure mathematics. It could
Right.
trade high as 60 because the market never trades at fair value. It
That's what
trades
I was
up
gonna
or
say.
down. Yeah.
People's emotions get into it and stuff, and
Oh yeah, and there's speculation too. So it's what do you we call it game theory
right.
when things get out of fair value.
Okay.
That's why we do the DCF, and essentially you don't need the DCF. You just need the P ratio, the enterprise value to EV sales.
Mm-hmm.
So EV sales, P ratio, price to sales ratio. And if anybody in finance says they know more than you, I mean, nowadays, like I said, I believe in free education, right? I really believe in this. I love Coursera, and I think if you just hit simply Wall Street, you go to valuation, and you can compare the space industry. You see here price to sales, and then you can compare companies based on ratios and multiples.
Right.
Nobody can tell you. Nobody can. I mean, they can lie to you, but you can clearly see if they're lying or not. So I just think we live in a beautiful time where there's no person that can tell you that they know better than you.
Yeah. No, I
It's
think it's
it's it's
definitely
just not.
the best it's ever been for retail investors, probably. So
Yeah, the market as a whole is like even professional. Like if you like the very expensive Bloomberg terminal that's like 24K, and the Cap IQ, which is over 10K. It's just essentially I mean they give you the stock research report,
hmm.
so that's a little bit better because somebody actually researched the whole thing. But besides that, you can't beat $20 a month for Simply Wall Street.
Yeah.
you know? Yeah.
I think you were talking about also you did like a comparative companies analysis. Did you arrive at kind of a similar number that way as well?
Yes, I did. I would like to actually. I'll send you the Excel for that,
Okay.
and um, and so that you can compare space companies to space companies, so apples to apples.
Right. Okay.
Yep. So I'll send that so you can include it in your video as a link, so for people. But essentially, Virgin Galactic was way more expensive. Terran Orbital, I think, was way more expensive. So it was cheap, trading at cheaper valuations. I can't say cheap or expensive, but I can just
Yeah.
tell you if we make a long DCF and they hit targets. This is without improving margins. It's cheap.
Yeah.
Hmm.
Okay. And in terms of Rocket Lab, you definitely don't expect them to have to dilute or issue more shares.
I do not expect it unless they have problems with the neutron rocket,
Okay. Yeah. I think that's fair.
which I hope they don't. Which I hope they
Me
don't.
too.
But who
Yeah, I'm looking
knows?
forward to the investor day. Going to learn a lot more about it. I think the 21st, so coming up in a few
Hmm.
weeks. I'm sure you'll be watching that as well.
Yes, yes. And then, like I said, I love the rocket launches. I look at them and um, I try to learn. There's this guy called Everyday
Oh
Astronaut
yeah,
on YouTube.
I've watched a lot of his
Amazing,
stuff. Tim Dodd.
fantastic content. Yes.
Yeah.
So, and then, yeah, your content is pretty thorough. So, like, very professional, actually.
Thanks, I
Very good.
appreciate that. I've just
Hmm.
I do say I'm just kind of I don't work in the industry, but I try to do as much
Hmm.
research as I can for sure. I was
Hmm.
curious your thoughts on competitors. Like I know SpaceX is working on their Starship right now, and that has the potential to bring like a ton of mass to orbit. Do you have any concerns around that and them being able to take a lot of the launch market, or is it the fact that Rocket Lab is in the satellite side of things that you don't worry so much about it?
I don't worry about it because if we lived in like, let's say, the 1920s, where Rockefeller had the Standard Oil and that was it. It's actually legally not possible to become a monopoly
Right.
nowadays. So government encourages and gives contracts to smaller launch companies like Rocket Lab, like other companies, even though some big company might give a better offer, they're legally not able to.
Yeah. So you
Um,
can't really have a monopoly. I guess
yes,
it wouldn't be
it's
allowed to
not
happen.
it's
Yeah.
not allowed.
Okay. Yeah. That's fair enough. Um, any other thoughts on Rocket Lab you'd like to share?
Let me think. As far as their tech, I just say that it's mainly government contracts right now, and it's essentially a satellite business, and this is what most people don't see.
Yeah.
I think even Peter Beck mentioned this before, but I think the name is catchy, right? Rocket Lab sounds catchy,
Yeah. Yeah.
but it's definitely not a rocket company. The thing is, like I said, if you package it with the fries, McDonald's just sells better, so it's the same concept. And then financially, of course, please do your due diligence. Like actually read, what you're investing in if
Yeah.
you're going to
For
invest
sure.
in, especially this industry is going to have a lot of carcasses. It's
Yeah.
it's very difficult. Yeah.
It's always been rough, already been rough for some investors out there, and like Astra and other companies for sure. They've had a rough time.
Yes, and just like it's a risk averse market, so you want to be careful with that.
For sure. Since I had you, I was just curious if you don't have any other companies, you don't have to answer it, but is there any others that you're particularly interested in out there that you think might make good investments down the line that would be interested in looking into further?
That I mean, you're saying in the space industry or outside the space industry?
In the space industry, ideally, but if you have something you'd like to mention outside, I'd still be interested.
There were some other ones, but none that are extremely liquid. I think that's the big problem with the space industry. So nothing I would say a retail investor should look into unless he does extreme level of due diligence due to liquidity. If
Okay.
these companies burn money, like, so you have to be careful.
Right.
Like I can't say like you should look into this. I'm just scared that they will run out of money and dilute you. I think this is the biggest problem in this industry,
Yeah.
dilution.
Yeah, that's fair enough. I know sometimes I've made videos and I've mentioned being worried about dilution, and some people are don't seem to worry so much about it. But I don't know. I guess it's
There's
fun
one
following the
that
story, but
mhm.
sometimes looking at the
Well,
numbers is less fun for people. But it's important.
AST Space Mobile, it
Yeah,
looks set to create huge growth, but at shareholders' expense. But I'm not sure. Like I said, who knows, right? Like, you can look at the numbers yourself. But I mean, let's just do a quick scan of ASTS.
sure.
Um,
I was looking into this one recently.
yeah. So everybody's bullish, but the cash reserves are 200 million, and they're going to burn estimated 100 here, 120, 23, another 150. So they're going to run out of money in 2024. And then magically in 2025, they're going to be in the green or in the black, as they say.
Right.
Jesus, like, I just don't know. I just don't know. You might get diluted and then you might make huge money on your dilution. Um, And I've seen people that are extremely bullish to the point where I've been insulted when I said, be careful. And
Yeah,
yeah,
that's
so
kind
I
of what
just,
I work. Sometimes I make
like,
videos
to
and
the point, like, it's a religion. So I just don't want to criticize anything. I'm just saying, like, this could be an excellent investment, but I don't know if they have the cushion,
yeah.
that's necessary. But what they want to do is, I commend them. It's going to be like a Starlink from what I heard.
Okay.
Very
Yeah,
similar to
that's
that.
kind of how I heard too. Yeah, I
Hmm.
guess dilution can not necessarily be the end of the world. Like Tesla issued new shares, and shareholders have
Hmm.
done fine. That was before they became profitable.
Exactly. Yeah. Look at them. Like, more power to Tesla.
Hmm.
And I think most car companies in the US have gone bankrupt, except I believe it was, I don't even want to say, I think it was just one car company that didn't, Tesla. And I think it was
I'm
Ford.
pretty sure it was Ford. I've heard them
Yeah. Tesla
mention
and Ford. And then everybody else has gone
so
bankrupt.
far.
So,
I think
so you
Lucid
want to be
actually
careful.
just said, it might have even just been today, that they're gonna they something announcement about being potentially able to issue like $8 billion worth of new shares. So
Hmm.
yeah,
But then like, if you are, it's fine as long as you know that you can set some money aside and not worry if you lose it. I mean, the space industry is phenomenal, return wise, just
right,
phenomenal.
yeah,
But do be very careful.
okay,
That's my advice.
yeah, I think
Yeah.
that's fair.
Hmm.
Okay, well, if there's nothing else you'd like to add, would you like me to link anything down below else, like Twitter or website links or anything like that?
Oh
Or
no, I'll send this DCF,
yeah,
and then I'll send a trading company's comparables of the space industry, like a small Excel,
yeah,
and then it should update. It's with Yahoo Finance; it updates itself.
yeah,
But yeah, I mean, there's nothing that can beat doing your own research. And then I know most people are too busy for this. So, like I said, if you're not in this full time and like actually going to see the launches, seeing which company is better than the other one, by
hmm,
all means, like, diversify and
right, yeah. There's
control
nothing
your
wrong
risks.
with it.
Yeah. Hmm.
Okay. Well, great. Thanks for coming on. It's very valuable information you're sharing with everyone for free, so we definitely appreciate it. If you've made it to the end of the video, thanks so much for watching and tuning into the whole thing. If you want to continue the discussion on stocks and investing, I have a link to my Discord server down below where me and other investors trade ideas and research. It's really helpful to work together as a community. Also, I'd really appreciate it if you hit like and subscribe down below. It'll really help the channel and the video reach a wider audience. Big thanks once again to Abe for coming on the channel. It was great to talk to him. I learned a lot, and I really appreciate him sharing his DCF with all of us today. If you'd like to take a closer look at his discounted cash flow valuation model, I'm linking to it down below in the description, as well as sharing a link to his comparative companies analysis spreadsheet where he compares RocketLab to various companies in the same industry and tries to arrive at a fair value that way. Definitely very valuable stuff that he's giving us access to for free here. So thanks to Abe once again. That's it for today. I'll see you guys next time. Bye.